Alright everyone, let's do a quick sound check. Let me know if you can hear me. Let me share my chart with you. I got Randy, Stefan, Vitali, Eddie, Greg, Abe, Alan, Ness, Mohammed. Just doing a quick sound check, making sure everybody can hear me. Alright guys, sounds good. Thank you for spending this afternoon. We're going to go over as much as possible here within the next hour. Alright, thank you Alan. Appreciate that, Stefan. Mohammed, alright, great. So before we begin, remember that trading is risky. The disclaimer on the risks involved with trading. Please understand there are risks involved. My name is John Paul. I'm the founder of DayTradeToWin. Usually I try to do these live webinars at least a few times a month, and I'll try to do more of them as well. I like to cover more detailed oriented. If anybody here is a new trader, please let me know and I won't go as fast. And I'll cover the basics as well, right? So if anybody is or needs me to slow down a little bit, I'm happy to do so. There's a couple of traders here in the room that are in mentorship, so I'm happy to see you guys in here as well. We also have a live stream from YouTube where we do kind of a morning understanding of using the roadmap and the Trade Scalper and the Atlas line. So if you haven't already subscribed to the YouTube channel, DayTradeToWin YouTube channel, you can find out when we have these morning and get notified as well with these morning live streams, I guess they call them, and you can learn a little bit as well. So to start off, does anybody here have, I know some of you do, but there's a lot of people here in the room that I could see that has the roadmap. So I think some people do, but just to confirm, the people in the room here that have the roadmap software, I'm going to cover it and review a little bit of the roadmap and price action as well. Randy, okay, Randy, not yet. All right. So when I think about Ness, okay, Ness, all right, sounds good. Mohammed has the AutoPilot, all right. We'll do a little bit of AutoPilot as well, Mohammed. Okay. All right, Alan. Just a scalper, Stefan. Okay, awesome. So when I think about price action, and the way that I like to teach it is I like to understand first what the market is trying to tell me, right? So with any type of trading that you're doing, I always recommend, right, understanding the first part of the chart. Is the market slow? Is the market fast? So some of you already know this, but I like to trade differently if the market is slow in comparison to where the market is more volatile. Now the reason for that is because when the market is fast, typically it moves further, it trends, and you have a larger opportunity for the market to continue in the same direction and then trail a stop. But when the market is slow, it's not the same thing. The market whipsaws. So we have to understand the type of environment that we're in order to apply the tools that we have, okay? Because we can't obviously counter trend trade, and we can't trade support and resistance when the market is overly volatile. That doesn't work. And the same thing, if we're expecting the market to make these large moves, let's say 25, 30, 40 points in a day, if the volatility is slow, it's never going to reach that. It's never going to make that. So I always recommend first that everybody understand if the market is slow or fast. And to give a quick understanding of that, I use what you see down here is the ATR, the average true range. And this helps me understand if the market is slow or if the market is fast. Now, for those of you who don't know, usually if you see the ATR, again, I have the E-mini S&P, but it's the same in other markets. If you see the market here at 5, let's say as an example, 5 points means that every candle is a reference of high to low 5 points. And the same thing if the market is slow, I always recommend that you understand the market's slow, and so at about 1.3 ticks, a point and a quarter, you have to consider that slow. So based on that simple information that I just gave you, would you say that right now, as we are in here, you can see the market is right over here. The equation is very slow, right? You can see that. So that's how I understand if the market is slow or if the market is fast. That's how I have a concept of what we're doing using the ATR. Okay. The next thing that I want to do is I want to look for an opportunity to be a buyer or a seller, but under the right conditions. So some of you may be using moving averages and other type of indicators, and that's fine if it can work for you. But I don't use any type of, and what we teach at DayTradeToWin does not use any type of moving averages or any type of those conventional indicators. I actually try to stay away from them. Now, if you're using them in conjunction with your own trading, that's fine, right? Because that way you may have a second or third source to help you understand. But I think sometimes because we can adjust the values and curve fit the data, today I'm going to use a 20 period moving average. Tomorrow I'm going to use a 30 period moving average, and so on. You see how we're always curve fitting to what has happened. So that's why I try to stay away from the conventional indicators, because it's so easy to update and change the settings. We never know what to really use. So when I use the ATR, I'm always using a setting of 4 being the last 4 candles. When I look at taking a breakout trade, I always recommend 2 candles closing above or below whatever for it to be a breakout, a true breakout, because I don't want a false breakout. So I use price action in a little different manner in order to help me understand, should I buy, should I sell? Abe, can you hear me okay, Abe? I've already started. Just letting you know. All right. So when I look at the, and everybody should be able to hear me too, Abe. So if you can't hear me, maybe log out and log back in if you're able to. So when you're looking at the market here, as an example, using the roadmap. So what you're seeing here is the roadmap software. And the roadmap software, so for example, today, the market went into the roadmap zone. This is the software. And the fact that it did not continue through it is really important, because it tells me that this area is support for whatever reason. And then if the market stays in this area and starts to climb out, we have an opportunity to be a buyer. So this is counter trend. So when I think about using these roadmap zones, because they're based off manipulation, the first thing I want to do is say, will it stay contained within this pricing in this area, or will it go through it? Now, if the market stays contained, how do I go long, or how do I do a counter trend, or how do I make that decision to be a buyer? So the market's coming down, lands in the zone. So how I teach this is I think about a pivot of some sort, where it lands in the zone, and this candle is the pivot because it is the first candle that stays inside of the roadmap zone. Now from this point moving forward, the rules for the roadmap are very simple. Before going long, let's make sure that this pivot isn't broken. So it's very simple. If I'm going to go long, that low price, which happens to be in this case, let me just bring this up here, 44.97 quarter, should not be broken. It's very simple, and I'm using price action to show me that once it lands in this zone, that it's going to be the price is going to be held. So we're in the roadmap zone, lands in the zone, the next candle is 1. I need a second candle to prove to me that the price and this pivot is holding. Before I continue, anybody have any questions on that? Just to be certain everyone's clear on how we're approaching this using price action. So right now this would be considered one of two. And now I need a second candle to close to confirm that we can go long. The next candle, as you can see, went lower. So that tells me immediately that this pivot is broken. We're still inside the zone. We haven't broken through the roadmap zone, so we have to restart this all over again. This now becomes the new pivot. And if we're still going to reverse, this would be 1 of 2, and the second candle would be 2 of 2. And now I can see the signal for the software, the roadmap software, telling me to go long. So I actually want you to know in advance, ahead of time, that we're going to have a signal. And sometimes it happens and we're not paying attention, but part of the way that I teach and what we teach here is you have software, but the software is only part of it. Knowing in advance that there's going to be a signal, whether it be the Trade Scalper or the Atlas line or the at the open signal, it helps me to prepare, because when you see this land in the zone, I know I want to go long, but I just have to wait for evidence or the proof for it to go long. And this second candle closing here is the proof. So I want to make sure everyone understands how I'm approaching this. I have the roadmap software telling me the zones. It lands in the zone. I have my evidence to go long. All right, everybody okay with that? Any questions? Now comes the fun part, the targets and the stops. So when I think about a target, I think about how much distance the market could move, and also where is the market coming from that it has an ability to still make a bigger move. So if I consider this is where the market is coming from and it's starting to turn around, I have to understand that this price and this pivot has a relationship. Okay? So the relationship is, if we had an entry that was way up here, you have to think twice and say, should I really be going long, because the actual entry is so far away from where it started off, or where the beginning of this pivotal point is? And the answer would be no. We wouldn't want to go long. So the relationship is, I want to enter as soon as possible as it starts to turn around with evidence of these two bars. And so I have to say, is this close enough to go long from that pivot? So it's 2.5 points, and if you look here at the ATR is roughly about the same. It's 2.5 points. So to me, this is a one-to-one relationship. I'm going long. The market has only gone 1 times the ATR. It still has room to grow. But if this second candle here that I'm referencing as the trigger to enter long has already made a big move, it's not worth taking the trade, and you would skip it. So it's not just signals. There's a lot more that goes into it. Is how far away, what's the stop, what's the ATR, can I still see the market grow from where I'm entering, right? We don't want to be overbought or oversold. So we think of this as the pivot. I like to have a stop that is just under this, or even just outside of the roadmap zone, and I'm going long now. Okay, let's see here, a couple of questions. Start off with Stefan. So the candles have to be ascending or just staying above the low of the red candle. So they can be any color, right? So they don't have to be ascending. They can be dojis. They can be green or red. I'll just submit this to everybody. They can be green, red, doji. It doesn't matter. What really matters, because if you think about, this could be a 1-minute chart, a 30-second chart, a 5-minute chart, a 10-minute chart. It doesn't matter. It could be a range chart or tick chart. Really, it's the same. This is still the lowest low pivotal point, and now we're seeing 2 bars that are unable to break this pivot. Just like this happened here, this was the first candle that landed in the roadmap zone. The next candle will be 1 of 2, right? So we're halfway there, and then the next candle is lower than this original pivot. So we started all over again, Stefan. All right. Let me see here. Gene says here, would you consider this a 2-bar approach? Well, it is 2 candles, and I'm not sure about the 2-bar approach that you're referring to. The way that I look at it is, I want to have enough evidence, not just by 1 bar. It could be 2 or 3, that we are not breaking this pivotal low. As a matter of fact, I think that there's a lot of ways that you could play this. So for example, the best opportunities are not the ones that have 2 strong green candles. The best opportunities would be when you have 1 green candle, and then the next candle is actually red. That looks like this. So it breaks and the next candle retraces back a little bit. That's a much better way because there's a couple of reasons, right? The first reason would be the distance from the pivot is smaller, right? So that makes more sense, less risk. The second is because markets love to test where they've traded or where they've been. So you see a lot of evidence of double tops, of double bottoms. So I know that if I'm entering long and the market wants to test where it's previously been, let's say here or here, then to me, it's on its way up. It's on its way somewhere and I'm in a better position. Gene? So to answer your question, it doesn't necessarily have to be 2 bars. It just has to make sense. Even if you entered on a 3rd bar, but you entered at a better price, even closer to this pivot with your stop just under the roadmap zone, perfect, right? So we're thinking about this where the roadmap zone is already applied. The software already tells me, be careful not to go short here. We land in the zone. Where am I going to go long? I'm going to go long after the market stops and begins to turn around, but turn around with enough room for it to still grow. Okay? Gene, Stefan, Abe, Mohammed, just making sure everybody can hear me. Everybody's okay with that. Ness? Right, Gene. I wait for the candle, at least for bar number 2, the second candle at least. I wait for it to close. Now, you can have the bar timer. You can have the, we're looking at the chart. We know it's going to close in 10 seconds. Can you enter just before it closes? Of course, right? It's not a big deal to enter, a second or two before the candle closes, right? That's not neither here nor there. It's not going to make or break you. But the fact that we've had enough evidence that the market is turning around, that's much, much better. All right. Now, can we take the same trade twice? And I have to say no, right? So the answer to a lot of these is, if it lands once again, as it did here, can I take it a second time? And the answer is no. So we don't like to take the same trade twice. Once this makes the move, and actually I want to explain to you how this roadmap is working behind the scenes. Whenever we have accumulation of contracts, at some point those contracts need to be exercised in the opposite direction to close the position, because it's called a round turn, where we enter and then we exit, right? So, or we go short and then we buy it back at a price lower, hopefully, to make money. So if you have a lot of traders that are selling and accumulating a position, at some point they're going to take a profit, or they're going to try to take a profit, and they're going to close out their positions by buying it back. And so what you're seeing here is a huge amount of contracts now in the opposite direction that are being executed because they're closing out positions. So there's profit taking that causes these areas in these zones to be created. And I think it's a great benefit. Traders that aren't using some type of outside source or outside influence type of software like the roadmap are really falling behind, because anytime you have something that says go long or go short, it's just go long or go short. But what is happening beyond that? Who is manipulating the market? Is there some influence that's creating or going to create a move? So this is the reason why I like the roadmap so much. And the same thing, if it lands here in this roadmap zone here, the rules are exactly the same, right? We're not reinventing the wheel here. All we're doing, and remember, the roadmap zone is already being calculated. This already exists. We know it exists. We know it's here. We know that something may happen here, and now it lands in the zone, inside the zone. So not just touching the edge, inside the zone. That's the setup bar. Call it the setup bar. Again, if you remember the rules, 2 consecutive candles minimum, proving to me that the market is holding that pivot and beginning to turn around. And I could use this lowest low plus a couple of ticks as my stop, or I could use just outside the zone as my stop. So my stop is predetermined as well, I know what my stop is. I know what my risk is ahead of time. So the software gave a signal to go long because of these two bars, and now I can take it up. Again, I don't know that we're going to make 10, 20, 30, 40 points, so that would be a trailing stop criteria. What I do know is that as soon as it starts to go in my favor, now I'm playing with the house's money. I can now trail a stop, I can add positions, I could get out of profit, right? So there's a lot you can do here as soon as the market goes up. So always look at the ATR as a guide. Now, what if the market goes through the roadmap zone? So what do you do in that situation? Well, we're using the roadmap as a filter and as counter trend, as you see here. But if the market goes through the zone, just go straight through the zone, we're going to go short, especially, and this is really important, if the market is volatile. If the market's slow, you may want to wait a little bit for another signal, maybe a trade scalper or another method. But once the market breaks through the zone, it means that this zone is no longer considered support. Or if it was to the upside, it wouldn't be considered resistance. And now I can buy, I can sell, I can do whatever I want. So the same thing happened here early on. So now this is actually the opposite. We're buying, well, somebody's buying, right? There's more buyers than sellers. So they're buying, they're buying, they're buying, they're buying, they're buying, they're buying. And guess what? Your moving average, your momentum, your MACD, and all your other indicators are actually at this point telling you to buy. And my software, the roadmap, is telling you caution. Don't buy it. Wait until it breaks through before you buy it. Or more importantly, if it reverses, you can sell it on a counter trend. Okay? And so at this point, we have 1, we have 2. So now we see the opportunity to sell. I'm sorry, this is the pivot. So this is just a little bit higher than this one. 1, 2 to go short, and the closing price 45.04 quarter. You could, Gene, you could add contracts. So there's a couple of ways that I like to trail a stop. I like to trail a stop by using multiples of 2, right? So multiples of 2, 4, 6, 8. So we'll start off with 2. Once the market goes in my favor, at least 1 times the ATR, at that point you can take half off and you can let the other half ride. So there's a very specific way that I like to do the trailing stops, but some people do add position as well. Usually I don't like to average in, especially if the market's going against me. I like to start off with multiples of 2, and then once it goes in my favor, half off and let the other half ride. And that way I can protect myself in that way. Okay. And it works on all markets, Paul. So you can use it on the ES, you can use it on the crude, you can use it on different markets. I'm just a very specific type of trader. I like the indices. So the E-mini is something that I show a lot. But price action, really, if you think about it, it should be able to be traded on all markets. As a matter of fact, one of the markets that I used to trade heavily was natural gas, and I put out a video not too long ago, probably maybe 3 weeks ago. I think you can still find it on YouTube, where I recommended a long on natural gas for obvious reasons. We're getting into the winter, so natural gas seasonality always increases, typically increases in the winter months. And natural gas is the cheapest it's been in a very, very long time. So if you're going to be a long-term investor, at least for the season 23-24 in the energies, I would, and it's already, gasoline is already starting to go up as well, but natural gas is right in the starting point. Natural gas would be a great market for everyone to, even the E-mini natural gas too. You can do a mini natural gas, just to give you a little bit of experience that I'm looking at as far as some opportunities, right? So buyers come up, they take profit, it reverses the market immediately because there's hundreds of contracts that are happening here So little 5s and 10s and 2s and 3s, and then 50, 50, 50, just taking profit, and that causes a reversal. Let me see if I can find an example where the market goes through the zone, so you can see it. And so here it is again. This is pre-market. Market comes up, lands in the zone, immediately reverses on the roadmap. Again, I don't say take it a second time. I say once it's done, and the reversal is over, right? Now it breaks the zone and keeps on going, right? Here it is again. Lands in the zone, reverses. Lands in the zone, stays contained in the zone, reverses. Starts to come out of it, and that's it. Now it wants to go higher. Okay. This is now middle of the night type of trading, so I'm sleeping. I'm not trading these 11 o'clock, midnight, right? I need my beauty sleep. So, but all that being said, if you're international and if you're trading the London Open, you can definitely see here the market land in the zone, unable to break through, and then reverse off of it. Okay. It depends, Gene. That all depends on the ATR. So it's a really, really good question. So how do you decide whether or not it's overbought or oversold, right, Gene? That's the question. So you have to use a little common sense as well. If the ATR's, let's say 3 points, and it puts you 8 or 10 points away from the pivot, that's no good. So I would say you have to keep it very close to a 1-to-1 ratio on the ATR. If the ATR is 3 points, make sure you're not entering too much more than 3 points away from your stop. Okay, that way we're taking into consideration how much more of a move or a distance we can still go, right? Because if it makes a big move, we don't want to be the last person now in on this move, right? We want to start at the beginning of the move, and sometimes you have to let it go, right? Sometimes it's not worth taking the risk, right? I'll give you another example. When the market ran into here this roadmap, it stops plotting once it breaks it, but I'm already prepared to either go short or go long, and it'll go long, leading me right into the next zone. So if it breaks, I'm already long, thinking it's going to go higher. Okay, in this case, it didn't go. It stayed within the zone, never broke out, and I'm long. Okay, so here's an example of a losing trade. So I've shown you some great winning trades. Here's an example of a losing trade. If you're taking this here to go long, obviously this didn't go long. We have the stop here, or if you want to have it a few ticks under the pivot, this is your stop. So the stop is predetermined. So this gave me an entry to go long, never reversed and followed through, and instead went against me. I'm out. And when I'm out, and I'm in this kind of a situation, you can recover, because as soon as it breaks the zone, 2 ticks, 3 ticks, that's all you need. You're short. And now you can recover, because now it goes right to the next zone. So you still have an opportunity. If the trade fails, you can now take it. If it has to break the zone, though. All right, that makes sense to everybody? Any questions? Did I lose anybody? Am I going too fast? Hopefully we have a lot of experienced traders here in the room as well. If you have any new traders, please let me know so I can explain and be a little bit more basic. All right. Now the roadmap, as well as the Trade Scalper and all of the methods that we teach. In the beginning, we started to provide them separately, but a lot of traders, they like to put it together and use the methods in conjunction with one another. So I have put together the Accelerated Mentorship. The Accelerated Mentorship has all the software. So if you're interested in the roadmap, but you also like scalping, the Trade Scalper, and you also like the At the Open. So for example, today with the At the Open, I'll give you show you the signal here. At the Open, So all the software that's included with mentorship is the ABC, the Atlas line, the At the Open 2, the Blueprint, the multi-lines, the news, the roadmap, and the Trade Scalper, and the AutoPilot as well. And so I'm going to go here for the ATO2. Market opens at 9:30 for me. And here we have the signal to go short for the At the Open. So this is telling me to go short here. There's nothing stopping me from going short, so now I can go short. So this is the At the Open signal for today to go short. Now I'm going to remove here everything off the chart, and I'm going to add something else. I'm going to add here the DayTradeToWin Trade Scalper. And I'm going to explain to you a little bit how this works. So when you think about scalping, you think about small moves to go long or to go short. But it's really not, it doesn't have to be small moves, right? It could be, the moves could be larger. So if anyone has the Trade Scalper, first make sure that there's nothing conflicting, right? So if you have a roadmap signal, or if you have another signal that's conflicting, obviously we don't want to take that, we want to take that into consideration. We want to have more things in our favor, all saying short or all saying long. So as I go through the chart here, what I'm looking for is a situation where, let me see if I can find one here during the day, not overnight. And yes, this does work for other markets, right? So you trade NASDAQ, yes. You trade crude oil, you trade the ultra bonds, you trade anything really. So look at this situation here for a minute. We don't have a long and we don't have a short. We have this telling me long, and then we have a secondary. There's actually two signals here to go long. And the back end of the Trade Scalper looks like this, in case you're curious to see what's in the parameters. And let me go back to here. So the Trade Scalper here offers you first trade only. So instead of having, you see how there's this signal and a long, so these are two separate signals, but they're both telling you to go long, right? So you can have this turn on or off as just one trade or two trades at the same time. So that's what that's for. The show double wick, so I'm showing you the double wick. There's two separate entries, okay? Two separate methods. Part of the Trade Scalper is not just one method, it's two methods that you learn. You can show the text, you can have a sound file. That doorbell sound that I have in the videos is the alert 4.wave built into NinjaTrader doorbell. You can have a filter. If the market is too slow, I don't want to see any signal. So right now I have it to 0, but if I put this to 1 point, if the ATR is less than a point, it'll filter out any signal. So the ATR filter avoids situations where I don't want to trade when the market is too slow. You can alter the text size. You could change the colors if you'd like. So you can see the one thing that's missing here is a value. There's no specific value. There's not a value of 3 or of 5 or of 50 or whatever. There's absolutely no optimization when it comes to the Trade Scalper or the roadmap or any of the methods that we teach. We really try to avoid the optimization part. So the software will do everything on its own. And so what I wanted to show you here is when you have multiple signals happening at the same time. For example, here's a long, here's another long. My bet is that the next few trades are all going to be, as long as there's nothing conflicting, are all going to be in my favor to the long side, because we have multiple going in the long position. And you can see here as well, there's a short, there's a short, there's a short, there's a short, there's a short. There's no long trades. So when I think about the Trade Scalper, I think about, wow, there's a lot of signals, right? So I don't want to take every signal. I want to find a situation where there's multiple sells or multiple buys happening back to back in a short amount of time. That tells me that we're going to have another 2 or 3 or more signals in my favor in that same direction, I would say. Okay. Okay, let me just, if I missed any questions, let me just go through the questions. I have Gene, I have Mohammed, I have Ness, I have Paul. Breaking the zone, do you wait for the candle to close? I do, Paul. So I'm always looking at closing bars, closing candles. So when the candle closes, that's really what I want to make my decision on when you're talking about the roadmap. Okay. These are all signals here. And if you hear any thunder in the background, I'm in Florida. This is Florida thunderstorms season. So I'm hoping that the power, even though I have a generator, the power is not going to cause us any issues for this webinar. But you may hear some thunder in the background. All right. Yes, Gene, these are all the signals for the Trade Scalper. Right. So you can take 3 points, Gene, to answer your question, for 3 to 4 trades, 3 points each. We're not taking 3 points on every trade. We're really trying to understand if the ATR is at 1 point or 3 ticks, or if you're using, for example, a 5-minute chart. We're trying to keep what the market can do for us. So as an example, I took off the ATR, but I'll put it back, the ATR here. And so the ATR, so I'm starting to see these short signals. I see one, maybe I'll wait a little bit. I see a second, I'll wait a little bit. I see a third. I start seeing what is possible. So the ATR is at 2.5 points. The ATR is 2 points. The ATR is here at 2 points. So it would make sense that you would want to take a trade for a minimum of 2 points, or at least very close to 2 points, instead of thinking 8 points, 9 points. At least try at first for the first target 1 times the ATR, and then you could trail a stop from that point forward. So if the market is slow, adjust and take smaller targets, smaller stops. If the market is fast, the ATR will also tell us that and make a larger or try or attempt for a larger target based on the larger ATR. Does that make sense, Gene, for you? Stefan, it's a good question. Usually the problem, so Stefan asks a very good question. Is it possible to have the ATR filter out both high and low? The problem isn't so much when the market is volatile, because I know the market's volatile, right? I can see it here at 5, right? And you may, or 5 or 6, and you may say, I'm not interested in trading when the market is this strong. So we haven't had, at least within the last year or so, really a volatile, crazy market like we've had in previous years. So I'm not so concerned about the volatility on the upside at this point. I'm more concerned when the market is slow, because when the market is slow, right, less than a point. So I think there was a question, and I forgot who asked the question, that can you have the high of the ATR as a filter, just like we have the low? So here in the Trade Scalper, we have a situation where it says the ATR filter anything less than 1. So you see here, this is above 1. There's a signal here. And the same thing, if I put this to 3, you'll see that when I click apply, this will disappear. You see, because the ATR has to be under 3, which it's not. Right? So, and that's really the reason. And what I was explaining was when the market is slow, what we have is chop and whipsaw. The market just flops around, and I don't want to get caught where it just goes a little bit and we see a signal and then it doesn't result into anything. It just goes sideways or it chops around, and that's more of the problem, believe it or not. And I forgot who asked that question. Stefan M, I think it was. I think that's more of the issue when we have the slower conditions. We don't have the market continuing. We have the market maybe trying, but there's no follow through. Okay, and so I think it's more important that we see or we filter out slower periods than we do more volatile, because we know when the market's strong or volatile. I can see it here at the 5, but it doesn't happen a lot. It's more of a rarity, right? What the more of the problem is, if you take a look at this, and then you look directly above, And what do you see? Nothing. It's impossible to trade that. This is just a whole big nothing here. And I think that's more important. All right, answer that question. So that's the Trade Scalper. And anyone, before I take this off, does anyone have any questions on the Trade Scalper? Or the roadmap? Before I switch gears here a little bit? All good. Okay, so let's talk a little bit about automatic trading, right? So let me just move this out of the way. So automatic trading is good and it's bad. The AutoPilot trading system is built on price action, and I'm going to show you the back end here. And I also wanted to mention to everyone that, and if I haven't done so already, but we're doing away with lifetime licenses. So lifetime licenses was something that we offered, and we have a huge amount of clients that have lifetime licenses, and it's come to the point where we're going to change the lifetime license aspect, and it's going to be on a different, maybe yearly or monthly, but lifetime licenses are going away. So currently we still have them available through the end of the month, but if you're interested in still taking advantage of the lifetime licenses on mentorship or on any specific one product, great, you can still get it. But towards the end of September, we're doing away with it. So just giving you guys a heads up, if you contact us and say, hey, I wanted a lifetime license for AutoPilot or for Roadmap, or I wanted mentorship, which includes everything, it's no longer available. It's not going to be available any longer. The licensing, it's going to be limited on it. All right. So the software that I'm going to look at next is the AutoPilot, and we include all of the software with Mentorship Plus, the AutoPilot, the Roadmap, the Trade Scalper, everything. Now, when you look at the AutoPilot here, there's a lot of settings, a lot. I'm going to cover each one with you and explain to you what they are, what they mean, so you understand what the AutoPilot system is all about. So the AutoPilot started off where we want to see the market starting to move in a direction and then taking advantage of that direction, but taking advantage of it in such a way where we're limiting the times that we trade, we're incorporating trailing stops, we're incorporating a type of breakout as well on every candle, we're recalculating, we're looking at how many bars we should be in a trade. I mean, there's a lot here that is covered. So look back bars, how many bars does the market or is the market reflecting, right? 2, 3, 4, 5. So for different times, for example, a daily chart, you're not going to look back to what happened 6 months ago, right? So we have this look back bars as a reference to see how many bars the market's going to look back and make a decision of where we're at. The order quantity, so the AutoPilot is unlocked. You can trade as many contracts as you want, although we do recommend that you start off with one or a micro before you trade 5 or 3 or so. Just start off with one, nice and slow. The maximum bars in the market is there to tell me I don't want to be all day in a trade. If I'm in a trade and it doesn't make the profit target, at some point I have to get out. I'm not just going to hold on to this and let it lose 3 days later. So this is a number of candles or bars that were in the market. But I've also added something else. It's called maximum bars in a loss. Because if you enter long and the market goes against you by 1, 2, 3, 4, 5, at some point you have to ask yourself, how many candles am I going to be at a loss here? And so I have this here set to 2 candles. If the market goes against me by 2 bars, it closes the position automatically. Trading hours. Believe it or not, there are times when it's best to trade during the day, during specific hours. So you can trade 24 hours a day, but if you think about when the market moves and when we have the best results, it's definitely between as soon as the market opens right up until about 1, maybe 1:30, 2 o'clock. That's when we have the most action, The volatility is still strong enough to make it move. This may change, but for right now, in this particular setting, this is on a range chart, 8 range chart I'm using, 8 range. I'm only trading this for about an hour and a half, right? And you can adjust this. So in order to turn this on, you would click this. Or if you say I want to trade till 2 o'clock, right? That's 1400, 2 o'clock, then you can change it. As long as you have this checked, every day it'll trade only the hours or the times that you want. Okay. The next thing is the settings. Yes, Abe, that's correct. So when you look at the market starting to move, we have to say to ourselves, it has to move by how much? So if the market's just chopping around, I don't really want to be in that type of a market. I want to see the market go somewhere. So the market has to have some type of distance that it moves. And that's what this offset ticks is. So in the beginning, the AutoPilot had just one setting for both long and short. But I like the feedback of my traders. And they say, why can't you update the settings separately for buys and for sells? And that's what we did. So you can set how many ticks of profit, how many offset of the market has to move before it decides to make a decision to be a buyer, separate from the sells. So in this particular setting, I have an 80 tick profit target, which is pretty big, and I have a 100 tick profit for the sell. I have a 12 tick stop and a 14 for the sell. So you can see that the targets are much larger than the stops. And not only that, most of the time, unless there's a big push, we use the maximum bars in a loss smaller than the stop loss. So if it goes against me by 2 bars, that could only be 6 ticks or 8 ticks. It'll never hit the stop loss to begin with. All right, unless there's like a big, something happens, a news event or something. That's what that's there for. Okay. I'm sorry, the questions here. Stefan, existing lifetime licenses will continue. Right, so the traders who have, Stefan, I'm assuming you have something that's lifetime, Stefan? Did you join the accelerated mentorship as well? If you have a lifetime licenses, Scalper, okay. So the answer is yes. So even if you bought it 10 years ago, and I have traders that for 10, 15 years are using the Trade Scalper or the At the Open system, and say, I got a new computer, my machine ID on NinjaTrader has updated, I have a new laptop, so we'll license you. You have a lifetime license, and so we'll honor that. So if you have a Trade Scalper lifetime license, you'll continue to have the lifetime. It's just moving forward after the end of this month, it's no longer going to be a lifetime option for the new buyers moving forward. But you're grandfathered in, Stefan, or anybody who purchases prior to the end of September. Okay? Okay, so back to this. So we can separate the targets to stops and the distance the market has to move. I have this set both to 3. And so we did the testing. The 3 works really well. You can set this to whatever you want as well. You can do testing on it for different markets because it's based off of price action. Now, really important, break even and trailing stop. So these features here, I think, are really important for any type of automatic strategy because we're looking at the market going in our favor, locking it in with a break even, and then trailing behind it. So as soon as the market starts to go in my favor, I'm starting to trail by 1 tick. That's what this is. And you can turn this on or off as you see fit. We have them both on. So once the market starts going in your favor, the trailing stop goes behind it. As soon as it makes 35 ticks, break even. The market gets pushed. The stop gets pushed to where you entered. So the worst case scenario is going to be hitting the trailing stop. It's not going to be the break even. It'll be the trailing stop since we have this at 1. Okay, it's the worst case scenario when it goes in your favor. We also have here a daily limit because some days are just not going to work, right? We have to expect that some days are going to be a losing day. So you can set this to whatever you want. If you just want to lose, let's say $200 a day, you would set this to lose $200 a day and it'll stop trading. Or a profit of $500 a day and it'll stop trading. So you can set this to whatever you feel comfortable with, and that way you'll be able to protect yourself. And if you're up, let's say $1,000 for the day, you don't have to give it back. It'll just stop trading. It'll say profit target or daily profit or loss hit for the day. And then tomorrow, again, for the same hours that you wanted to trade, I think I have this set to 11:45 Eastern time. So it's my time. And then you would set it to your time zone. It'll start up again. You can use the range chart. That's actually a recent update that we started looking into. So we can use range charts. You can use tick charts. You can use minute charts. I really like the range chart recently. The more testing I do on it, the more I like it. So the range chart I think is a great option. You can choose your sim account or your live account. You could over here start behavior. I recommend wait until flat, but some traders just want to enter immediately. So immediately submit synchronize account will just put you in the trade if there's a trade ongoing. But you may get an error if that happens. So it's always better to put wait until flat. And everything else is pretty much defaulted. Okay. All right. Any questions on the back end of the AutoPilot? So if I turn this on here, and you can actually have templates. So you can see here that I have different templates. 15 seconds. I like the 15-second chart for an hour or two a day. I have the 8 range. I have after hours template. I have a 20-minute template. So and have a NASDAQ as well. So you can create as many templates and as many markets as you see fit, just like I have here. Okay. So if I turn this on here, I come here to wait until flat, enabled, and I click OK. It'll say, although you have the order confirmation enabled, orders generated by a strategy will be submitted without confirmation. So what this is telling me is that it's not going to ask you, are you sure you want to buy or are you sure you want to sell? It's just going to do it for you, and you have to confirm that. Okay. So now, actually I should do this a little bit differently so we could see more signals, because I only have it for this time. So it stops trading here because this is the last trade of the day. So I'm going to uncheck this so we could see as many signals as possible. Right, that way you guys can see more action on the AutoPilot. And I'm going to click apply. I'm going to uncheck this so it's 24 hours, which I don't recommend, right? This is just to show you. And I'm going to turn this back on, click apply, and click OK. Okay. So here you see the entries and the exits of the system. So if this, for example, is a trailing stop, it started to go and it didn't hit the target, came back and trailed a stop. This example over here got you in, and then look at immediately it stopped you out. So I don't want to have these large losses. If I have a small loss, fantastic. I'll take that small loss anytime or any day, because I want to have the larger win. So the reason why I'm using 80 tick target and 100 tick target in this example is because I want the market to go in my favor and make these big moves. And if I have a couple of small losses, that's fine. I can deal with that. The same thing here. The market went up, didn't make the target, came back, and as you can see, was a trailing stop. We still made money, but not as much as we could have. The other thing is when you're in a trade, if you wanted to click close or if you wanted to move the orders, because let's say that you started to see that you were up a couple $100 and you didn't want to give that up and you say, you know what, I want to just get out of this. You would click close or you'd move on your chart trader the target or the stop to close out the position. So even though this is an automated system, you can manually exit the position if you feel the need to. You don't have to just let the system do it all. You're up, you can move the targets, move the stops, you can close the positions at so you're still in control, really. That's what it comes down to. All right. Anyone have any questions? All right, guys. I think that I've covered the roadmap. I've covered the Trade Scalper, the AutoPilot, some trade management. Hopefully you learned something. If you are interested in still getting lifetime licenses, maybe joining the accelerated mentorship, please feel free to give me a call or visit DayTradeToWin.com. At the end of September, we're doing away with the lifetime license option. And for those of you who have one method, for example, the Trade Scalper, or have the Atlas line or the At the Open, and still want to join, I do provide discounts for the current clients, so you wouldn't have to pay for something you already have. We offer discounts as well. Mohammed, email me on those questions that you have, and I'm happy to answer them for you. Okay. The look back bars here that you're referring to. Oops. Right here, look back bars right here. This is what you're referring to. But send me an email. I'm happy to explain it to you. All right. Take care, everyone. Be safe out there. Talk to you soon. Bye-bye now. Thanks. If you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com, join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.